Why are financial markets so evil? Why do they move in the exact opposite direction that you want them to when you commit to a position? When you buy, the price drops. When you sell, the price moons right afterwards. When it looks like the coast is clear and everything's positive, the market crashes again. Is it you, or is someone else pulling the strings? Hi, I'm Doc Severson with Ready, Set, Crypto, and here's your 1-minute market for Wednesday, the 3rd of July. Those that are relatively new to financial markets will buy into the notion that some evil player is out there behind the curtain pulling the levers on this market, whether it's whales or exchanges or bad players in this space, whomever. After trading financial markets for the past 23 years and making every mistake in the book, I've noticed that there's some very simple, very specific reasons why markets act like this, and it has everything to do with the way that we all think and how we behave as a group. So what do crypto investors really want? Well, we want certainty and we want reduction of risk. We'd all like some kind of reassurance that we'll get our money back plus some return. And where do most people search for certainty and reduction of risk? Well, they ask others. We do this in our daily lives by searching product review ratings before we buy something, whether it's for a device or for a meal or even for a car. We've come to implicitly trust others when it comes to their opinions. Shouldn't the same logic apply when we invest? By taking mass social input into your investing decisions, you automatically become part of the largest, least knowledgeable group of investors. And these are also the ones most likely to panic and make rash decisions when things don't instantly go their way, which is almost assured to happen with normal volatility. Markets will move around and these folks can't stand the heat and will bail at the first sign of adverse price movement. This is the equivalent of standing up and yelling fire in a crowded theater. And now with social media at everyone's fingertips, you can amplify your fear to a global audience and start the panic. And this works in both directions. We recently saw a panic to buy as the price of Bitcoin approached 14,000 because, hey, this might be the very last rally we'll ever see, right? Rallies cause pain to those sitting on the sidelines, and the resultant exponential rise causes those that were bearish or short to buy back their position and close it. And the higher that the price goes, those that were patiently waiting for a pullback finally panic and buy in at the highs, afraid to miss the train. And as we can see by this week's pullback down to below 10,000, that mass hysteria up here was the worst possible thing that you could have followed. If you bought at the highs, at one point you were down 28% on your position and more than likely puked it out down here underneath 10K. It's that evil market's fault, right? Not really. Can you see how you brought that pain on yourself by becoming part of the mass of retail investors? So now everybody that was talking big about buying the next dip as the price was running away from them are faced with this now, and this is likely what they've been saying over the last couple of days. I don't know, this pullback doesn't feel right. Besides, someone said that Bitcoin was heading to 1,300 again. Better stand to the sidelines and be safe. And this is why we had correction after correction in the last Bitcoin bull in 2017, where people sold out at the bottom and subsequently failed to buy the dip. Well, this is what happens when you try to trade this market by feel or plugging into social media for direction. You automatically make yourself part of the largest and least sophisticated group of traders out there. How do you fix this and become part of the smart money instead? First off, you have to fundamentally understand how crowd behavior works and how it affects financial markets. It's different these days with social media. Being part of a trend is great and is when most of the gains occur, but if you want an edge over the rest of the market, you simply must find a way to make decisions different from the herd by entering near the bottom of the move when the situation feels more uncertain, and not at the top where the reward is low and the risk is high. Secondly, to find these better entries, you have to follow a trading system that takes your discretionary judgment out of the loop. None of the good entries will feel like you're creating certainty or reducing risk. Quite the opposite, in fact. The good entries normally feel really, really bad to enter. And lastly, you have to be willing to do the things that majority of people either cannot or will not do. Markets by themselves are not evil. We become our own worst enemies when we follow the crowds and depend on the judgment of others to make investing decisions for our own capital. Think independently if you want to beat this market. Let me know your thoughts in the comments below, and we'll see you in the next edition of 1 Minute Market here at Ready, Set, Crypto.